Welcome everyone to today's Edison Electric Institute webinar, A Clean Energy Economy, the Role of Climate Finance and the Customer. My name is Vanessa Ferrero and I'm a manager for international programs at EEI. Today's session is part of EEI's Destination 2050 Dialogues, our COP26 webinar series focused on the critical issues facing the clean energy transition. We are excited to welcome two speakers today, Christine Martin, Vice President of Public Affairs and Sustainability at PPL Corporation, and Suleman Alli, Director of Strategy and Customer Service at UK Power Networks. They will be joined in conversation by Lawrence Jones, Vice President for International Programs at EEI. This session is a dialogue, so we encourage you to ask questions for our speakers using the chat feature. Lawrence will aim to incorporate as many of them as possible into the conversation. Without further ado, I will turn this over to Lawrence to get started.
Thank you, Vanessa. Good morning, good afternoon, good evening, wherever you are. Thanks for joining us. I think the world is at a very pivotal place today, having just gone through 2 weeks of climate discussions about where we head as it relates to COP and as it relates to the climate. We've had some very interesting conversations across the globe. And I myself was visiting Korea the second week of the COP, and the only conversation being held was around climate and what we'll do after COP. And so today we're going to dig right into one of the topics that got a lot of time at the COP, which is finance and the role of finance and the role of the customers going forward. And as Vanessa said, I'm delighted today to be joined for this conversation by my good friend Christine and Sue, who I've known for a couple of years. And so it should be a very interesting discussion, basically trying to frame the conversation around the very interesting topic of the customer's role, as well as the role of finance. So to begin with, Sue and Christine, welcome. I'd like to ask both of you to begin by telling us a little bit about your company, where it's located, what you all do. Let's start with you, Christine.
Sure, thank you. And good morning, at least good morning from Pennsylvania, where I am, and good afternoon to others. Christine Martin, I am the Vice President of Public Affairs and Sustainability for PPL Corporation. The PPL Corporation is an investor-owned utility headquartered in Allentown, Pennsylvania. We serve about 2.5 million customers, primarily electricity transmission and distribution, as well as gas distribution, in Pennsylvania and Kentucky. We also own about 7,500 megawatts of generation in the state of Kentucky. And we are also the owners of Safari Energy, which is a commercial solar developer with projects and relationships across the US. I believe we're in about 24 states in the US. I should also mention that 2021 was a transformational year for PPL Corporation. We had just celebrated our 100th anniversary, actually in 2020, of continuous operation and continuous location in Allentown, Pennsylvania. We also made some fairly significant strategic moves in 2021. In June, we closed on the sale of WPD, which is a UK network operator that PPL had owned for a number of years. We also announced in March the acquisition of Rhode Island's main electric and gas utility, Narragansett Electric, from National Grid. So we are in the process of repositioning PPL as a US-focused utility.
Thanks, Christine. Sue, over to you.
Hello, good day, everyone. My name's Saul. I'm the Director of Strategy and Customer Service at UK Power Networks. We own and operate 3 of the 14 networks in the UK. We don't own any retail operations or generation. It's just the distribution networks. We serve about a third of the UK's population, about 20 million, and that equates to about 8.4 million homes and businesses. And we basically have been, our company was formed in 2010 when CK Infrastructure Group purchased the 3 network businesses from EDF Energy at the time. That's it, really. We have the privilege of serving London, and it is about 4 o'clock, just after 4, and it looks like 10 p.m. here, so welcome to winter.
Thank both of you. So let's get into the conversation. So last week, COP26 ended. We had 200 nations that signed the the Glasgow Climate Pact, as it's being called. But I think first, based on your experience, and both as a citizen of the world, which both of you are, did you have any expectations about the outcomes from COP26 and were those expectations met? Maybe we'll start with you, Christine, and then we'll go to Sue.
Yeah, I think that in terms of expectations, I mean, my view, I think heading into COP26 is that it would be a series of challenging discussions for a couple of reasons. I think the clean energy transition is happening. It's happening at a different pace, in a different scale around the world. And also, I think on the heels of the pandemic, as well as extreme weather events over that same time period, which I think we're just, I think the kind of that framework was really just exacerbated with what the world as a whole was going through. I think it set up those conversations to be, I think, just challenging in nature. I think that the commitments and the pledges that I expected to hear, and some of the ambition that I expected to hear, I heard, and I think it's sincere. I think it's sincere, across the board. But the challenge, I believe, is that energy, environment, economic development are just so linked, and you can't delink those three. And so I believe that countries and sovereign nations, being sovereign nations, will look at the impacts on their nations, their borders, first and foremost, and that is what they are elected by their citizens to do. And I'm not saying that none are altruistic. I think that many have those qualities, but again, I think it is just the nature of nation states to look out for those three components and more for their citizens. And so that's why I think when you start to go lower than ambitious commitments and statements that you hear from the heads of states at the beginning of COP26 to the negotiations and the details, it starts to get more and more challenging, because there are naturally, I think, some winners and losers in those discussions. And I think we also heard a lot more and with a lot more vehemence and urgency from some of these smaller nation states in that discussion. And so I think that the conference organizer had as a UK conference organizer had as a ambition or a goal to keep 1.5 alive. I think that was met, because I think the discussion is still alive. I think, again, it's perhaps the commitments and the direction may not have been 100% what everyone wanted to see going in, but I do think the discussion is alive and well. Switching very quickly to, as a citizen of the world, as you say, I look at these types of international compacts and discussions as steps, and I often am concerned that perfection becomes the enemy of the good. And so I, as a citizen, like to see going forward progress as opposed to perfection and no progress.
I like that. Perfection should not be the enemy of the good. Progress as opposed to stagnation because of debates back and forth. Excellent. So you get to tell us your view, and obviously you're in the UK, so you were in the midst of all of this. What happens, and how do you feel about the outcomes?
I would give it a number. If you had forced me to give it a number, I'd probably agree with our Prime Minister and give it a 6 out of 10. And the reason for that is that, look, making progress in such a knotty issue that is climate, which requires you to think about the economic and the social impacts of some of the changes that are needed, these are not easy things to grapple with. And therefore, success requires persistence. Right? If it was that easy to solve, we would have solved it by now. So I think we have to be we have to be reasonable in our expectations of what we're trying to achieve here, given the scale of the challenge. So I think overall, if you look, we've seen a 0.6%, or sorry, 0.6 degree reduction since the Paris COP. And so over the last 6 years, we've had pledges, promises, policies, etc., to try and get us closer to the 1.5 degrees. So every COP, I think, is trying to be more ambitious than the other, and we should commend that, right? Now, I kind of agree with Christine's point here a little bit, which is, look, we can get stuck in the minutiae of like phase down versus phase out coal or whatever, but to be honest, that doesn't matter in the short term. I think what we need to focus on is action, where people are setting targets, and I think that's the key thing. Rather than set lofty ambitions, right? We should be setting near-term targets and goals that we outperform, because I think that's what gets you momentum, right? And it builds confidence, right? In the same way in which high-performing businesses operate in competitive markets, they might have ambition, but they set targets, and management's job is to then outperform those targets, right? With their employees, with their supply chains. Countries should be no different. So I think there needs to be a focus now, in my view, on action, on demonstrating results, and building confidence that some of these things can take place. And I guess the last thing I'd point is that, you look at, if someone would have said to you when, you were eating your turkey in Christmas 2019, right, that, by the way, guys, in less than 12 weeks from today, there's going to be a global pandemic. You're all going to be asked to sit at home by the Prime Minister. You're not going to be able to go out. I would have laughed at you. Everyone would have laughed at you, because it could not have been, foreseeable, to be honest, it certainly wasn't for us in my household when we were opening our Christmas crackers, but it happened. And I think what it shows is that when an emergency is foisted upon you, right, humankind can adapt, right, if it needs to. And I think we need to take that same emergency mindset that we applied so well in COVID to adapt our businesses, adapt our societies, adapt our healthcare systems, right? We need to use that same emergency mindset on climate. And I don't think it's that difficult. It just requires us to be thoughtful and inventive about the solutions. We'll get there. We just need to apply a bit more pressure and be more focused and target driven, in my view.
Yeah, and I like the point you make about urgency. And I think we'll come back to this whole conversation around urgency and pace, long-term versus short-term thinking. But let's talk about finance. So one of the things that was very interesting about this COP was the level of involvement from the business community, especially from the financial sector. And we had this very discussed idea that was thrown out there by Mark Carney about $130 trillion that would be available for dealing with some of these issues. So this brings up two questions around finance. One, and we'll start with you, Sul, and go to Christine. What is the role of ESG? This is something that we've heard a lot of before COP, right? And so now we hear a lot of discussion around this $100 trillion coming. So what is the role of ESG in the context of meeting these goals? And for you, Christine, so what do investors expect in terms of their companies in their portfolio? So let's start with you, Sul. Talk about ESG in the context, and then Christine, you can follow on afterwards.
Yeah, I think, thanks, John. So what I would say is that we are observing that ESG and climate financing is noticeably cheaper, and it's driving more and more corporates to issue in this manner. And I think the evidence for us is clear and unambiguous, right? And what we're seeing is a quid pro quo for cheaper financing. Companies are having to prove that they're using those funds in an appropriate way, and therefore there's an increasing demand in greater disclosure, greater transparency, which actually I think is very positive, because in order to build public trust in net zero and consumer confidence, transparency and more disclosure, I think are good bedfellows of one another. So I think in our view, we're seeing a lot more interest in ESG and climate financing. I think it's driving positive behaviors in corporations, because I think there's a link to trust and the whole kind of stakeholder activism and public purpose. I think these are all interlinked concepts. And I think they're good things. We're seeing, for example, even the ratings agencies now basically updating their ESG methodologies, introducing ESG issuer profiles, credit impact scores for rated entities. So they're basically saying, look, the rating agencies are putting an intent out there to say, we want to see and demonstrate systematic and transparent incorporation of material ESG issues into credit ratings. So for companies like myself, like UK Power Networks, that needs to raise capital, actually, we need to make sure that we can demonstrate to investors, to the banks, to the lenders, to the rating agencies, that we are a organization with purpose, and that we're playing an active role in net zero in order to basically access cheap capital as well as doing the right thing.
Yeah, Christine, you're intimately involved in the ESG activity within the EI and help to drive that ESG template forward. Talk about ESG, but then also as you're talking to investors, what are you hearing from them in terms of their expectations of portfolio members or portfolio companies in their portfolio, like UK Power Network and yourself? What are you hearing, and what's the ESG play here?
Yeah, I think I would absolutely agree that we're seeing a shift in investor focus on ESG and ESG investing, and that's taking a couple of forms. One is, I think, investors maybe limiting the amount of investment in companies either not meeting net zero goals or specific climate targets, or those who have earnings from coal above a certain amount. So we're seeing some investors adopt specific targets, like a 25% or a 20% target. It can vary, but it's certainly something that we're seeing. We're also, similar to discussed in the UK, we're seeing some shift of a larger allocation towards green bonds and sustainability-linked bonds. I think that will only increase. At this point, I think it's, we're seeing it as a larger demand. And again, I think that trend will continue. So I do think it's imperative, Lawrence, for companies to align that ESG narrative and clean energy transition strategy with their financing strategies. So specific to your question around, kind of what we're hearing from investors, obviously that is a transition that is experienced at a different pace for different companies in different jurisdictions. I'll use PPL as an example. We have generation through one of our operating companies, our Kentucky generation company, and there is still a significant amount of coal in that generation portfolio. But we do see, and we have visibility, and have been able to give our investors visibility into the transition of that aging fossil fleet to cleaner and non-emitting resources. And so that level of clarity and visibility, that you have a plan, they can see a plan, to Saul's comment, that it is a credible and actionable plan is really, really important. There will be some investors that at the outset, just do not want to have coal in their investment portfolio. I don't think that is the overwhelming amount of investors that we're seeing now. But again, I think the trend is towards a credible clean energy transition, adoption of aspirational net zero goals by 2050 or earlier, and probably even more important is interim targets that the company has an action plan to meet.
So I think the investors are one important part of your constituents, your stakeholder. The other important part, perhaps even more important, are the customers. And obviously, one of the things I've heard is that the role of consumers or customers was somewhat dampened at this COP, but obviously we know they're important. So talk about it, maybe starting with you, Christine, and we'll go to Sue. How do you see the role of customer in the clean energy future of your company? How important is it? And what can we do at COP27 in Egypt to raise the understanding of everyone about the importance of customers? Just this linkage between customers and investors, I think, is extremely important. What are your thoughts?
Right. I mean, customers are, as a regulated utility, customers need to be at the center of everything we're doing. We are serving electric and gas to those customers, and we need to be laser focused on reliability, resiliency, and affordability within our clean energy transition strategy. And so I think from a customer standpoint, there are a couple of ways, or a few ways, I think, that customers really are kind of at the center of the transition. One is simply even driving preferences, consumer preferences. So we are seeing, even in the state of Kentucky, increasing interest and demand for renewable generation and clean energy options. And so that is that is a very customer-centric and customer-focused approach, and it is incumbent upon us to be able to meet that demand, and that figures very prominently in our strategy. I think in addition to kind of proactive customer engagement, there is also somewhat passive engagement. So as a utility, we place a high focus on energy efficiency and demand side management. We hear that the electron that you never produce is the cleanest one, the negawatt concept. So that is a focus of our company. We've actually seen over a 4-year period from 2017 to 2020 that we have been able to save through those programs, or our customers have been able to save over 2 million megawatt hours of electricity. So for our energy profile, that's more than 1 million metric tons of CO2e in that period. Again, that is energy savings, so just not going into the atmosphere. So I think that that's another kind of key customer area. The other place that I would focus and where I would think about kind of future, COP27 or even before, is really the reimagining of the electric grid, of the energy grid. And enabling electrification and decarbonization of the economy. So I think utilities are uniquely placed to be able to bring that energy grid of the future to work for our customers and also to work for decarbonization of the economy. Smart, flexible grids able to accommodate EVs, distributed energy resources, enhanced electrification. So that grid really is the backbone, whether it is passive energy efficiency, proactive consumer choices at the commercial, industrial, residential level, building energy use transition from gas to electric. You really need the electric grid to serve as the backbone to making that happen.
So I think Christine has laid it up perfectly for you to talk about the grids, right? Given what UK Power Network does. So what's your view on the customer, given where you're coming from? I mean, you guys, 20 million customers in the city of London. Talk a little bit about your perspective on the customer and this point that Christine made, the grid. What are some of the things UK Power Network is doing to accelerate this transition?
I think your question was around the role of customers. And I think if we look at the carbon abatement that's needed over the next decade, it's going to be very different from the last 15, 20 years, where actually we achieved decarbonisation principally through renewables connecting to the grid. Actually, customers didn't need to do much at all. That's not going to be the case over the next decade. The net zero transition is going to be much more local, and it's going to require us as consumers, households, businesses to make decisions about how we fuel our vehicles, how we heat our homes. So I think the next decade is going to be a lot more invasive than the prior decade in terms of decarbonisation. Now, the brutal reality is that a lot of customers don't know what's coming, right? What that actually means. They've got some awareness of what net zero is. It's good for the environment. But when you actually probe through customer research and say, well, okay, do you know what that means? For example, what does it mean for the way you heat your home? And when you try to explore options with customers about, oh, well, would you consider a heat pump? And they're like, whoa, I need to change my gas boiler? How much is that going to cost? Well, what's the benefit of that? So as soon as you start to scratch beneath the surface, I think consumer understanding of the lifestyle choices they're going to need to make, which are going to cost, right, in the short term for them, are not well understood, right? So you've got a combination where consumer decisions are going to be key, but actually consumer understanding is not at a level where they can make informed decisions. And that's not a good combination. So I think consumers are going to be really important for the future. And there needs to be a coordinated effort with working with government, working with third sector, working with the utilities and other market providers to help build the understanding of consumers of how they can decarbonize their lifestyles, right? That's point one. The second point then is I think the role of the customer is going to be different. In the past, customers are bill payers, right? They will be participants as well as bill payers in the future. And I think Christine has summarized it very well. I like maths, and the way that I put it into an equation, right? For a network company like ourselves, the amount of expenditure investment that I need to make, right, is a function of a number of things. It's a function of background load growth, right? How much do I expect the economy to grow, housing to develop, stuff that I've always seen, right? Plus low carbon technology growth, right? Which, you know, by all forecasts should be exploding. We should be seeing a lot more electric vehicles, heat pumps, etc. But I need to minus from that, right? Minus from that the amount of energy efficiency and flexibility and existing capacity. And I think that's where the consumer role is, is brought into sharp focus, because I think what will be different in the future than what has been in the past is, you know, just because you add more load with EVs and heat pumps doesn't mean automatically that you have to add a shed load more investment, one for one. Because actually the role of flexibility and energy efficiency by maximizing the utilization of the network, by using energy when it's cheaper and greener to do so, actually offers customers savings. Now, the challenge for us as a sector and for the regulator, for government, is how do you create the market mechanisms whereby that value, right, is monetized and incentivized to those participants and to customers that actually make it happen. And it'll be a great report, for example, if your attendees are interested, that was published in the UK. It's called Flexibility in GB. It was a report done by Imperial College and the Carbon Trust. And they worked out a big number, billions of pounds that can be saved from avoided generation, avoided build out of generation by basically using energy more efficiently and in a more timely way. And the way to unlock that is a combination of smarter, more digitally enabled, flexible networks coupled with compelling consumer propositions, right? And I think that's for me, the choice that we have in the future. We can either do it the way we've always done it, right? Or we can actually adapt for this new digital age and say, right, how can we bring technology, data, and consumer propositions together, behavior changes together, to actually get a better outcome that's lower cost overall for society. That, for me, is the biggest strategic challenge as network companies that we face. Because if I go to my regulator and say, I want a 40% increase in my total expenditure, they're going to laugh at me saying, well, hang on a minute, how have you factored in all of these other things that could actually reduce the costs?
Very interesting. So let's invite the audience to send your questions if you have. There's one already here. But before we take the question from Elliot Rossman, Christina, I want to come back to you. Sol mentioned, EVs and all of these things require infrastructure, right? It requires the right infrastructure to be in place. And so I just want to ask you if you could just comment a little bit on the fact that yesterday, President Biden, Joe Biden in the United States, signed the $1.2 trillion infrastructure bill. What does that mean from your perspective? What could it mean for the industry in terms of infrastructure, which Sol has talked about, and some of the other things that I think might be in the bill for the audience to know about?
Yes, so President Biden just signed that bill into law yesterday, a $1.2 trillion infrastructure bill. So in terms of our industry, there are really tens of billions of dollars in that legislation that are really geared towards some of the things that we just talked about this morning. So some of the funding is focused in the government R&D space with DOE, and I'll get to that in a moment. Some is directed to the states for specific funding programs, and some is available to investor-owned utilities and other companies to avail themselves of. So a key area of focus is around grid resiliency and investment. So hardening the grid against extreme weather events and physical impacts. And there's about $5 billion specifically for grid resiliency and weather-related issues. It's a significant amount of money. I would say, Lawrence, from the EEI member companies, just to kind of put that into kind of relevant terms, our sector invested about $25 billion in grid hardening and resilience in 2020. So it is certainly significant. I think it's directed perhaps at some specific physical impacts, climate-related issues that we've experienced in the country. and it will absolutely be helpful. But again, it's part of a larger investment strategy, I think, on the part of utilities. Smart grid investments also feature very prominently, again, creating this flexible grid able to carry renewable energy sources from location, utility scale locations to load center, as well as investments on the distribution system. And then another piece that I wanted to mention that I think is something that we've seen a lot of bipartisanship around is EV infrastructure. And so we see a lot of opportunity there through the infrastructure bill in terms of building out EV charging infrastructure, incenting electrification through EVs, not only in the private space, residential consumers, but also in the public space. And there's a fair amount of dollars going to public transportation, so buses, public buses, school buses. Again, we see a lot of opportunity and need in that space. The piece that I wanted to come back to with the Department of Energy is around research, development, and deployment. So Saul mentioned clean energy technology. That figures very, very prominently in the clean energy transition discussions. It needs to. It's certainly a key part of the transition that we see for our generation fleet. And it was also recognized significantly in the infrastructure bill, particularly for hydrogen research and development, as well as carbon capture utilization and storage. I saw a question in the queue, and I don't want to jump above you, Lawrence, but I did see a question in the queue around gas and the role of gas and gas financing. I think that remains a challenge, because as we, I think, look at the energy needs and affordability, which absolutely is very, very key to kind of the sustainability of a clean energy transition. Gas, I believe, will continue to play some role. How large a role, I think, in part depends on the commercialization of other technologies, the availability of solar and wind at scale. And storage at scale to support that resource in the US. And we certainly see those prices coming down. But the CCUS piece, I think, figures prominently with DOE to consider whether a fossil fuel like gas can continue to be part of the portfolio over the long term with carbon mitigated. I don't think anyone is considering that gas is a long-term strategy unabated, but I do think there's a lot of focus both in the sector as well as the government about what the role of gas can be in an abated form, and that requires more investment and research to make that happen.
Thanks, Christine. So I would be remiss if I didn't come back to you on this issue of gas, given what just happened in the UK. So you can blame Christine for setting you up for me to ask you this question, but talk about so quickly the role of gas, but then also Christine talked about the investments being made through the Biden administration through this infrastructure bill. Can you talk a little bit about the kinds of investments being made by the UK government in terms of resilience and hardening of the system? So those two questions: one, the role of gas in the UK as you see it going forward, and then also the kinds of investments you're seeing in R&D and other areas from the UK government.
Okay, no problem. So look, our government issued a hydrogen strategy a couple of weeks ago. And I think the big debate in the UK is to what extent will hydrogen be used for domestic heating? Because we know it will have a role in the economy, but it's just not economic at the moment. So a bit like what Christine mentioned, there's a lot more research and trials going on to understand safety and how can we scale it economically. But there's a big question mark at the moment as to what extent we'll use it to heat our homes today, which is natural gas. Will hydrogen just replace that? I'm not sure that's the case. When you look at the fundamentals, the economics of it, how much it costs to produce green hydrogen today, do we think we're going to go wholesale to hydrogen boilers? Not convinced at the moment. So I think it will be a blended approach in the future, but it's too early to call. I think there's more research, more work that needs to be done, probably until the mid-2020s for the UK anyway, to understand what exact role hydrogen will play. That's where we are at the moment. But in the meantime, what we're seeing is a lot of innovation in the marketplace particularly off the back of recent government announcements to subsidise heat pumps. So a heat pump typically in the UK costs about £10,000 versus, say, £1,500 for a gas boiler. So it's still very expensive. But what the government's done is introduce subsidies of about £5,000 and then encouraging the market to innovate, to scale those technologies and try and bring the cost of the heat pump closer to a natural gas boiler today. So that's what we're seeing here in the UK. In terms of so that's the first question on gas. What was your second question, Lawrence?
Well, just in terms of investments, in terms of smart grid and resilience and other areas, like EV infrastructure, what's happening in the UK?
It's interesting, actually. The approach typically in the UK is provide targeted support from government where the market needs it. So if you look at the renewable success we had, there was what we call the feed-in tariffs, where investors were offered rates to basically incentivize them to put renewables on the system. And we are seeing targeted intervention by government. So, for example, there's a couple of £100 million of investment to encourage charging infrastructure across the strategic road network in the UK, which is basically our motorways and some of our air roads. So we're seeing that, but principally the approach we're taking is to take a market-driven approach, which is the market should innovate and determine how the charging infrastructure should roll out. We don't have a command and control plan from what I can see. There is some choice interventions to be made, but in the main, it's more about letting the market innovate and produce compelling consumer propositions. So we're seeing, for example, in the network space, investment increasing, but there are different schools of thought, because the big issue for us is that if we accept today, like in my patch, I've got about 150,000 electric vehicles, right? That's in the 3 regions that we cover. By 2030, that could be anywhere near 2.7 million, right? But it's uncertain in terms of how quickly we will ramp up to that. And it's also uncertain in terms of the impact that each electric vehicle will have on the grid, because it depends on smart charging, a whole bunch of other things. So do I go about digging up the streets and get ready, or do I take a demand-driven approach, which says, look, I need to get much better visibility and understanding of what's happening on my network at a much greater degree of granularity than I do today to ensure there's sufficient capacity in time, rather than digging up the streets and taking a planned approach. Because the issue with that is I could dig up the streets in South London behind me, but actually the problem might be in North London. And how am I going to respond to that? So, we've said, look, how would a business operating in a competitive market seeking efficient deployment of capital, how would that business operate? And that business, I think, would have a much more laser-like focus on understanding changing consumer trends, consumer behavior patterns, and understanding what's happening on its network to be able to deploy that capital in the right place at the right time. And I think that's the big debate that's raging in the UK at the moment, is what does that look like specifically? How much investment should we as network companies be allowed up front, and how much should be released through what we call uncertainty mechanisms in the regulatory construct, that we get released investment as it becomes well justified and evidenced?
So there is a question, 2 questions in the chat, one from Elliot Rossman, which I think we've addressed a little bit regarding natural gas and investments in natural gas. Then there's one from Ramik who talks about the role of transmission, but then he ends by asking the question around, is there going to come a point where government and customer, the different priorities might come to a head? There be sort of a mixed set of objectives here in terms of what customers want and what governments want to be done. Let's talk about it in the context of affordability, which you brought up, Christine. How can we make sure that this energy transition is done in a way that is just and equitable and fair, so that this clash that Ramik is talking about doesn't occur? So you go first and then Sol. Let's talk about affordability. What needs to happen to make sure that this thing is affordable for everybody?
I think there's a few layers to the response to that question, but let me start with the utility perspective. It's kind of building a little bit on what Sol was just talking about. From a utility perspective, in terms of keeping rates affordable, just generally, but certainly through this transition, as well as meeting the needs of the customers, I think really starts with, one, utilities need to constantly be working to be more efficient and effective in order to keep their rates reasonable. So that could mean eliminating redundancies, process efficiencies, more automation of work. So, optimizing work, basically, in a nutshell, really driving costs out of the business while not impacting level of service. And I think we just heard some tools about how to do that. So one is absolutely creating a smart grid. So automating the network. I would just use as an example, just in our Pennsylvania utility, which is 29 counties, we have over 7,000 smart devices on that network, on that distribution grid, which enables us to not only enhance reliability and resiliency, but also to enhance our customer offerings and our service for customers, whether it is commercial and industrial customers through electrification, as well as some of our private solar that we've seen. The other piece, I think, in creating that headroom is it enables utilities, because in the US we don't have the same structure in the UK where we have rates set for a longer term with very much incentive based and performance based. We are generally rate case to rate case, and that's not a great way, an efficient way to run the business. So creating that headroom by squeezing out efficiencies in the system while not impacting service also gives us the ability to be able to make investments, to grow that rate base and make investments between rate cases. Again, I mentioned our Pennsylvania utility has been our model in our company that we would look to replicate. They haven't been in a rate case since, I think it's 2014 or 2015. And don't expect to be in a rate case likely for several more years, because they've been able to efficiently run the system, to rely on automation. Now looking forward to a full digitization strategy to make data work for us in terms of how we run the system, how we automate our processes, and how we serve our customers. So I think that is really important in the absence of specific regulatory mechanisms that either incent or allow recovery between rate cases, like we have at some level at the transmission level and in a couple of our businesses. It's really utilities challenging themselves to be efficient and to put automation and digitization to work for them and for their customers. And I think that's where you start to at least have a sense of how you can balance affordability, resiliency, and reliability. It doesn't mean that rates won't be going up, because this transition will cost money. It doesn't mean keeping rates flat in perpetuity, but it's about at least being able to keep those rates manageable for our customers. The other piece in terms of kind of government and customers coming to a head, so I'll put my policy hat, because the other side of my job is public affairs. I do think that, at least speaking in the US, I do think that our policymakers do need to be careful to not get too far ahead of what is possible through clean energy technology and enabling the grid to deliver a clean energy transition, because I think that is where you start to run into issues of policies, perhaps driving unsustainable practices. And I think that can have negative impacts on affordability and resiliency and reliability. It also, though, I think more importantly, or perhaps not more importantly, but at an equal level, I think causes public support to diminish for a clean energy transition. And that is where we see, as we've had in the US, perhaps more than in the UK and Europe, the pendulum swinging on customer focus and patience kind of with the pace of policies. So I think that's really important for utilities to really drive this transition and see our energy grid as an enabler and a backbone, but also for policy to be ambitious, but to not be blind to I think what is possible over the next several decades.
So what are your thoughts on this issue of affordability, given what we also saw in the UK recently with regards to price spikes as a result of the natural gas issues? how do you guys deal with this issue of affordability at UK Power Network?
So I would probably say that there's probably three things from a network's point of view, recognizing that our share of the energy bill is less than 20%, right? So we've got to look at it in that context. So consumers will see the overall bill, including wholesale costs, as you've described. But what do we need to do with the network costs, given the broader context? I would say three things. One is we need to avoid the temptation, which is to say lots more EVs and heat pumps means lots more investment, where we just got to basically build, right? Because I think that's an outdated mindset. There's no question more capacity will be needed, right? But we need to apply a modern mindset, which says what's the most efficient way to build a network and to build it right and fit for the future, not with the paradigm of the past, right? So we need to therefore be, in my view, demand driven, and we need to ensure that we deploy our capital efficiently, not just build out and then earn a return on it, because that for me is a dumb way to do it, because all that happens is consumers pay and those assets are not utilized, and that's not good for anyone in my view. So we need to do the right work. The second thing is once we've got, and that requires a shift in culture and emphasis in utilities, right? Because unless you've worked in a competitive market where you've had to fight for your business, right, where you had to compete against others with differential propositions, you're not going to know how to do that, right? Businesses that work in the consumer sectors are really hot on consumer trends, really hot on data, really hot on what's happening, And if any utility says they're as hot as that, I don't believe them, right? They have to change, and therefore that requires an infusion of talent from other sectors to get them ready for this new future. The second thing is, once you've decided or you understand your early warning system's telling you what you need to do, is how do you do it in the most efficient way? And I think that's where, if you're a network company under the regulatory framework that we operate in the UK, which Christine rather eloquently described as very performance focused, output focused, we need to be able to deliver and be incentivized to deliver at the lowest cost. That means that we as companies, in the same way that a business operating in a competitive market, if it can deliver for lower cost, it shares that benefit, right, with its customers through higher profitability. That should be the same of a utility network. So if I can deliver, if my regulator allows me 100, and through innovation I can deliver through 80, I should be able to share an element of that and share the other part of it back to customers, right? So we call that like the TOTEX incentive mechanism in the UK, right? That drives management to not just turn up, put their feet up and just, watch the revenue flow in. It drives management to operate like they do in a competitive market, which is how can we drive greater profitability, greater efficiency, right? And benefit from it. The second point then is competition, which I think regulation should encourage as well. If you look at how we've delivered decarbonisation in the UK over the last decade, we've had independent connection providers, independent distribution network operators being encouraged to basically establish businesses and to offer choice to customers. And what that's allowed them to do is, one, bring prices down, but secondly, offer choice and offer resilience, because it's not just the networks now that are building the capacity. You've got a much more kind of diverse supply chain that is developing. I think we need more competition to keep the networks focused and to make sure consumers get a good deal. And then the third bit of that, of the strategy, in my view, is like the whole consumer engagement side of it, which is you can have the best early warning systems, you can deliver efficiently, but if no consumers buy electric vehicles or heat pumps because they're put off by the cost or don't understand it, well, we're all going to be standing there and at the wedding and the guests haven't arrived. So we need to basically make sure that there's a piece of work that we as utilities have got to do, but I don't think we do it in isolation. I think we've got to work with charities, with the third sector, with government to have a more coordinated engagement program with consumers to give them information to help make informed decisions. But it's got to be their decisions ultimately at the end of the day.
So we have about 10 minutes left. So I'd like to now zero in on two topics and call it sort of a mini lightning round, just so we can get to them. The first thing, just quickly, are there any specific financial instruments either of your companies are using to sort of accelerate its investments or attract capital? Any specific thing you're doing that might be of interest to the audience? I don't know, maybe Sul and then Christine.
Yeah. Would you like me to go first, or?
Yeah, you can go first, and then Christine will go after you.
Yeah, I mean, I think the key thing we're looking at the moment is sort of green bonds. We've placed a bond recently of a couple of £100 million. We've seen the benefit in terms of the lower cost that we got. In fact, it was one of our lowest ever coupon rates at the moment. So definitely it's a buoyant market out there. And we saw the order book at four times what we needed. So it's definitely, capital is out there and it's seeking reasonable returns and ethical returns and green returns. So definitely, I think it comes back to the first point we made, that it's a buoyant market out there at the moment. As a result of that, we are effectively changing our reporting, really upping the game on ESG reporting and transparency to levels I don't think we've ever seen before. And that's been driven not just from the needs from investors and ratings agencies. Actually, our customers are demanding it. To explain, I think there's a big fear that if companies are greenwashing, how do we know whether the actions match the rhetoric? So it's a good way of kind of bringing the people, demonstrating action and progress against key targets. But green bonds are the key way in which we, as a network company, are using those instruments.
What about you, Christine? What's PPL strategy?
Lawrence, I would say the same. We're evaluating the use of green bonds and sustainability linked bonds as well. So for us, it's really a look ahead to fund the significant investment that will be needed to transition our aging fossil fleet to non-emitting resources. So we would expect those types of bonds and financing instruments that Sol mentioned to provide an efficient cost of capital, as well as align with, I think, investor portfolio expectations. So for us, it's a bit of a look forward as we transition to our on the path to our net zero by 2050 goal.
Good. All right. Well, listen, we got two more questions I want to get to, and they're pretty sort of a straightforward, I would think, at least I hope should be. The first one is risk, right? So obviously finance, customers, all of these things, as we do look towards net zero, the idea of risk comes to mind over and over again. From your perspective, can you name one risk factor you think we should be concerned about? You go first, Christine, and then Sol. Just tell us that one risk factor we should be thinking about.
I mean, I think one risk factor we should be thinking about, which I think I mentioned, is the loss of consumer confidence and public support in a clean energy transition strategy. And to me, that links back to being able to do this in an affordable and reliable way that is delivering value, not just to our shareowners, but also to our customers.
So, one risk factor. You're on mute, Sol.
I would say, as a network company, that one of the big risks is that networks are a barrier to decarbonisation, because the issue that we've got to get our head around is how we're going to make sure that customers can do whatever they want without having to face really extensive lead times or capacity being an issue. So we've got to keep the lights on, keep the reliability, great service, but we've got to make sure that as customers want to connect, they can do so in an effortless way and at a reasonable cost. So I think, building on Christine's point, I would have said the same as number one for in terms of consumer trust, consumer understanding. But secondly, as network operators, we've got to make sure people connect cheaply and easily. Otherwise, people are going to be questioning, why do we need these guys? If it's that difficult, we should get someone else to do it.
Let's just talk quickly about pace and urgency. And one of the things that fascinates me is that we're moving too fast. Some say we're moving too slow, others say, and others say we're not sort of recognizing the urgency of the day. And then, Christine, you said something when we first talked a couple of weeks ago that I want to bring up here, the notion of the sustainability of sustainable development, making sure that the energy transition itself is sustainable. Let me go to Sol first. How do we ensure that everything we're doing is, in a sense, sustainable long term?
How do you ensure that something's sustainable for the long term? I mean, I think you've got to, in my view, if you look at the past, what have we learned, right? So in the UK experience, we learned that a combination of targeted government intervention, followed by effectively the market innovating to produce things at scale, bring costs down, has resulted in huge amounts of renewables, right, in the UK, more than what anyone would have foreseen 14 years ago. And therefore, I think that same recipe is what we need to look at in the future. We need to look at the challenges. We need to say, right, where does government need to intervene here in a targeted way? What does that intervention look like? And what does the market need to do to actually effectively use that government intervention as a springboard to make things cheaper, faster, better? And I think we need to apply that same mindset that we applied to renewable generation in the UK to some of the other challenges, electrification of transport, electrification of heat. And I think by taking that same recipe, and then every party knowing what role they've got to play and working together, I think is the way in which we create a sustainable transition.
Christine, how do we get the sustainable transition?
I think I think I couldn't have said it better myself. I think it really is striking the right balance between the government intervention and push and kind of bringing innovation to bear. So, I think I pointed to efficiencies and innovation as playing a key role in delivering high quality of service and the transition while keeping rates competitive or affordable. I think that private capital certainly has a place, a role, and we talked about green energy financing. There are also research and development investment platforms that many companies, including PPL, are part of to drive clean energy technology demonstration and deployment. But government has a role there as well in terms of research and development, as well as appropriate tax policy. And clean energy tax policy is a place where we have seen, I think, in the U.S. Some growth and results from tax policy that has been in place for resources like wind and solar. And I think that if we can we look at that approach on perhaps a technology neutral basis to bring all of that innovation and that knowledge to bear, I think that is one of the ways that we can produce a more sustainable energy transition.
Well, my final question to both of you is, what excites you now about and gives you confidence that your company, in our industry, but your company specifically, is going to achieve its own net zero goal and climate target? What gives you that hope and confidence that you guys are going to do it? You go first, and then Christine.
Oh, that's a great question. Lawrence. You should be on telly, Lawrence, with the man. Great question to ask. I would say I've seen a shift over the last 18 months to 2 years where young folks actually want to work in organizations like mine. People think that, they just want to work in cool organizations, and cool means tech. Actually, given the work that we're doing and the way in which we're shifting our business to be more technology focused, more data focused, we're starting to see a new cadre of people entering our business that actually want to make a difference, and they want some purpose in their career. So what gives me confidence is if I can attract talent that otherwise, 10 years ago would have gone to, the likes of the Accentures of the world, and the big consulting houses actually want to come here, and they want to do something. I've just got like 4 data scientists that we've recruited over the last 2 years. They're doing some amazing work, which just wouldn't have happened 10 years ago. So that gives me confidence that we are a magnet for talent, where people want to do something that is purposeful in their careers. And that gives me confidence, because if you've got good talent, you've got good ideas, and we have a good regulatory framework here in the UK, I think we can do a lot.
Christine?
Yeah, I think that I agree. I think that innovation in our sector is unlike what we have seen in the past. I would also say another space that gives me confidence, and it is both from a individual company standpoint, but a sector standpoint, is the level of cooperation in terms of resources, financial and human resources, that this industry is putting to bringing forth the innovation and the technologies that we know we will need to achieve a net zero economy is like anything I've seen before. It is individual companies and trade associations and innovative energy investment platforms, and also bringing in the Department of Energy as government partners to this effort. Yesterday, or maybe it was the day before yesterday, a fund was just announced through Energy Impact Partners, and this is private equity, $1 billion for that flagship fund, and PPL is a participant in that energy platform. But that is the kind of progress and commitment that gives me hope that we will get there. It is coming from multiple directions, and I think it's on a scale that we haven't seen in the past.
Well, listen, this has been great. So we have a very good ecosystem that's working, and hopefully that's going to get us where we need to be in the year 2050 or even before then. I mean, we've covered a lot of grounds here. And like I said, your perspectives have been very, very well received. And so I'll end by saying the following. Assume today is November 16, 2022. We've just come from COP27 in Egypt. And this wasn't a question was planned, but you just prompted the question for you to end here. What do you think the conversation is going to look like? Starting with you, Christine, we'll end with Sol. Is November 16, 2022. We've come back from Egypt. What are we going to be talking about then?
Oh, in a year, that's a hard question to end on, Lawrence. Well, hopefully we will be talking about a pandemic in the rearview mirror, number one. And number two, I think perhaps, I'm not sure that the discussion will be significantly different in a year, because a year on this journey is not a lot of time. Mm-hmm. But hopefully we will be talking about, maybe some further commitments in place for countries around the world, not just commitments, but actual actions to get there. So maybe a little more clarity, perhaps, around the approach that underpins those commitments. Maybe.
Excellent. Thanks, Christine. You, Sol.
More countries with tangible targets that we can measure against, and secondly, more closer to 1.5 degrees. We've seen a 0.6 degrees Celsius reduction over 6 years. Hopefully we can get a bit further closer with more policies and actions in the next 12 months.
Well, thank you so much. I'm going to make the commitment here and now that next year, right after COP27, the two of you will be my first guests on the conversation post COP27. So thank you so much for doing this, and I look forward to seeing you guys in person very soon. And thanks for joining us. Let me turn it over to Vanessa, who will wrap things up. Thanks.
Thank you. Thanks for having us.
Thank you.
Thank you, Lawrence. And thank you again to Christine and Sol for joining us today and sharing their insights on the role of finance and the customer in the energy transition. And thank you to everyone for joining and asking so many thoughtful questions throughout the session. We will be sending out a recording to all attendees, which we will also be putting on our YouTube channel, where you can find recordings from other past virtual conversations and webinars. We encourage you to register for the final session in this webinar series by visiting tinyurl.com/EEI COP26-6. I've also put this link in the chat. Our Destination 2050 dialogues will end tomorrow with a session on meeting the net zero challenge from policy to action, with speakers from EDP, National Grid, and Edison International. To continue engaging with EEI International programs, please follow us on Twitter or visit our website. Thank you and have a wonderful rest of your day.